Folks, it's Matt Hayson here with another clear-eyed read on Sydney's property market. Well, Sydney auction headlines are telling completely different stories, and one of them is wrong. Following last weekend's results, the media once again punched out conflicting reads on the same set of auction data. The AFR ran with the headline, $1 million gain in 6 years as Sydney buyers defy interest rate nerves, presenting as a bullish weekend where buyers pushed on despite rate pressure. Over at REA though, it was a very different tone. They ran with the headline, rate hikes begin showing impact on Sydney auctions, pointing to buyers becoming increasingly cautious. Macro Business took a firmer stance, running with the headline, fading auction market signals house price falls. So, it was the biggest auction weekend of the year so far. Who was right? Well, when we look at the final data from SQM Research, it paints a sobering picture. The final clearance rate, well, it landed at just 46.54%. There were 1,126 auctions scheduled over the weekend. Only 18% of those sold under the hammer and 28% sold prior, a clear signal to us that sellers are acting on strong early interest rather than risking auction day exposure. So the verdict? Well, the AFR headline and the market assessment was wrong, and the clearance rate sitting in the mid 40% bracket tells that real story. Now, inflation, it isn't cooling and the rate outlook is shifting again. Yesterday's headline inflation printed at 3.8% in January. It continues, unfortunately, to surprise to the upside. And the RBA is starting to see it's becoming embedded across a broad range of items. Markets, well, they're factoring in another rate increase in May, and what is already becoming an increasingly price-sensitive property market, headwinds are certainly evident. Commonwealth Bank and Westpac both lifted their fixed-rate home loans yesterday by 0.3% following the hotter-than-expected inflation print. Now, CBA has lifted its fixed-rate loans twice in 6 weeks, and as the largest lender in the country, movements like this flow directly into buyer confidence and ultimately some pressure on property prices. Now, our market is rewarding precision and punishing some optimism. Good results are absolutely available for price-aligned sellers, but we're already starting to see guides adjusted on new listings as buyer depth is absolutely being tested, particularly as this pre-Easter stock levels continue to rise. Now, sellers, they are making pre-auction moves, and well-educated and well-informed buyers are stepping in quickly when price aligns with their requirements. That's the reality of the current landscape. Engagement is there, but price precision is getting very, very sharp right now. So we close off summer this weekend. Many of us glad to see the humidity go, and we've got some amazing homes open for inspection, and I look forward to catching you all next week.